Warning: this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and yesterday I had a fantastic conversation with Tony the Bull Severino. Tony is a CMT and the founder of Coin Chartist, so he was kind enough to come on the show and give you his thoughts on the markets. So without further ado, let's get into this.
Great. Yeah. So first chart I wanted to share with you is look, I know everybody out there is wondering, has Bitcoin topped? Is this it for this bull cycle? Or do we have more to go? I know most people out there believe with high conviction that Bitcoin will hit $100,000 a coin. I'm in that camp. I still believe that that's a possibility, a strong possibility. But as a rules-based trader who was taught to look at objective signals, I kind of don't really like what I see out there for the most part, to the point where I named my last issue of my newsletter Now or Never. I see a lot of now or never type stuff in the charts right now. And the first one is this, 1 month RSI chart, relative strength index. And basically with the moving average overlaid over the chart, you can see that each time the RSI went over 70, which is overbought conditions, but in crypto it tends to, or in most assets, it actually really tends to be like the most bullish zone. After it's already in above 70, when it comes back down and penetrates the RSI based moving average, we tend to get a bear market. So you can see it happening here in December 2013. We had an extended bear market. Happened again December 17, extended bear market. We did get a higher high over here in late November 2021, but I'm still of the mindset that the bear market began in May 2021. And as you can see over here, it's right on the moving average right now. In fact, it's if you look at the values here, it's less than a point below. Above the moving average. So technically, it's still above it. I think a close below like 58,500 would probably put us below it. So this month, we got 19 days and 6 hours left in this candlestick. To me, it's probably the most important month in years in crypto, in my opinion. Mainly for these sorts of negative signals that are potentially on the horizon. So, looking at this, I've been very much looking for top signals in Bitcoin. I see a similar top signal with the RSI. This is actually the 2-month chart on the S&P 500. And I think this is important, because there's a lot more data, there's a lot more history, price history, going back on the S&P 500 than there is Bitcoin. You can see when the RSI, actually the 2-month RSI fell below 70, we got the dot-com bubble popping. We got the great financial crisis. We got, this wasn't too bad of a correction over here, but it's still, a few years of corrective behavior. A few months of corrective behavior. We got another one here, a couple, decent down candles. This was COVID, so we got a huge plunge here. Even the most recent strong correction starting in 2022 really began with the 2-month candle after it passed through 70 on the RSI. And once again, you can see it just like how the moving average in Bitcoin, it was right on the money. We're right on this 70 mark here, where in fact a little bit below at 69.81, it just ticked to. So, again, this is an absolutely critical monthly close. Speaking to the whole now or never theme, if we start to go below here, we may see more corrective behavior. And with the sort of mood that's out there in the market, and in the panic and fear, especially over a recession, wars, things like that, there is a possibility that this could get really bad. So definitely something to watch for. Speaking of the great financial crisis over here, I think the biggest thing this past couple weeks, or at least in August so far, has been the fact that the VIX broke out to the third highest level. I guess I should say the second highest level since the great financial crisis, the third highest level ever in history. So this even caused me to start to stand up and worry a little bit about what's going on. I mean, I have been trained like many people who have been in crypto for a while. Have been in it for 7 years. You buy the fear. I remember on this COVID, Black Thursday, 2020, March 2020. It was terrifying, but I remember thinking in that moment, it can't get worse than this. This is a buying opportunity. I wasn't around, unfortunately, for this, but I actually didn't buy here. I was expecting things to get a little bit worse than they did. Bitcoin ended up recovering extremely well. It just hit 61,000 or something like that recently. It's at 59.5 right now, or 59,250. So I was of the mindset we'd get something a little bit deeper, especially with how much panic and fear is out there. But now you can see the VIX also broke out of this wedge-like structure here. I had it drawn like a wedge. This is drawn across candle closes, and you can see that the body of this candle is now below this line with a long wick above. Drawn this way across the tops of wicks, it's still broken out, although, it's only a few points above where this downtrend line would be. In my opinion, if this closes back under here, or, the other line over here might be good enough, this may have just been one big shakeout, with panic and fear as bad as it was, but it really wasn't a meaningful, move on the VIX because it didn't actually close all the way up here like these other instances. So something to pay attention to. With the VIX being the talk of sort of finance, especially around, this is very historic. It's the third highest in history. It caused me to look at the Bitcoin versus the VIX chart, and I came up with this. This is the actual BTC USD long-term chart here, and then this is the LMACD logarithmic MACD for this chart. So I just got Bitcoin in the middle so we could try to see how it marked bottoms. We already had bottom over here, but this gave us the Black Thursday wick. And there's a few things I think that are really important here. So one is, if you notice and you look at where this crossover was, it began a bear market. Even over here, when it crossed down, gave us the COVID collapse. Over here was yet another bear market. So the fact that this is on the cusp of potentially bear crossing, I don't think that that's especially good for Bitcoin. Again, speaking to the whole now or never theme of my newsletter, coinchartist.substack.com. So the LMACD is the log version of the MACD. MACD stands for Moving Average Convergence Divergence Indicator. So what this thing can do is it can converge and cross down, or do like here, and it diverges upward and creates, this is actually tells you that things are overbought. But when it does diverge upward and kind of misses the bear cross, you get an extreme bullish move. So, it happened right over here, and you can see how big the candles got and how strong this rally gets over here. So we really want to see, especially me as someone who's bullish Bitcoin and still sort of looks towards 100K prices. We want to see this diverge this month. We want to see Bitcoin reverse. So we do also have the this trend line here. Each time it hit this trend line, we did get a rally. We got this enormous rally here. We got the bull run in 2020, 2020 and 2021. And now once again here, it could produce, yet another rally. A couple things I noticed about this. So one is there's some pretty interesting cyclicality around this. It's not 1-to-1 on every single one, but I mean, this is only one tick away. Cycle theory lets you be within 10% left to right translation. So to me, this is showing volatility being very, very cyclical. Volatility is cyclical in nature anyway, which actually reminds me, there was one other indicator I wanted to kind of show off here. And, the fact that we're above the Bollinger Band basis here is probably a good sign. I don't think any sort of extreme bearish moves are ever confirmed until you go below there. So we want, again, just like we said, we want to see this diverge up. We also want to see Bitcoin remain above the Bollinger Band basis on this BTC USD / VIX. The last thing that I kind of want to make note of about this particular chart is, this, looking at it by itself, that looks really bullish. That is, a hammer candlestick. It's usually a bullish reversal candlestick. Long wick shows buying activity. But I noticed if you look everywhere else, there's really no other lengthy wicks like that except for right here. And as we all know, this was February 2018. That was really the kickstart to the bear market that lasted all the way through to December 2018, where it bottomed down here at $3,000. So, I don't think that this is as great of a sign as maybe it would look at by, you would take on its own, especially with this on the chart. But, this definitely says there's a lot going on here. There's potential for a cyclical bounce, but it's not guaranteed, especially with things like a bear crossover here. So now, why do I think then we're still going to 100K or higher? And I am a huge believer in Elliot wave theory. And so now this chart here is the gold spot versus the dollar. This one's Bitcoin CME futures. Just happen to select CME futures because I like the layout of the chart. And I'm going to do some more wave counting on it in a minute. But as you can see, Bitcoin has been following gold's trajectory extremely well. You get this sort of sharp downward movement here. Downward sloping downtrend consolidation, same sort of thing here. And when it ended, it broke out into wave one. Had a very sideways-like correction here, sideways-like correction here. Broke out to wave three, and then you got the same sort of downward sloping, expanding triangle type, expanding wedge, whatever you want to call it, type pattern. And so it did make a lower low here in gold. We made the lower low here in Bitcoin. And if it continues to follow that trajectory, we do have wave 5 in Bitcoin ahead of us. In terms of gold, you would want to count sub waves. So 1, 2, we're probably going to maybe form a triangle or something else over here before making the final move up in gold. I know people are looking at a lot longer of a uptrend in gold, and that's totally possible, but this is sort of what I'm looking at based on Elliott wave theory. Moving right along into some of the charts I have prepared. This is the short-term trend essentially, and I have this marked out as 1, 2, 3, where we just completed 4, and 5. There's in Elliott wave theory or Elliott wave principle, there are rules and guidelines. This is the guideline of alternation where it says one correction is sharp, one correction is sideways. In this case, in this particular short-term trend, I believe we got the sideways one up front and we got a sharp one here. What's not depicted here, but is over here, is not only is there alternation between sharp and sideways, but there's alternation between simple and complex. So a simple correction is labeled ABC, and this is all it is, pretty standard ABC. There's really not a lot of ambiguity there. It's not too complex. That satisfies, to me, a simple ABC pattern. Here we had, what could be an ABC here, an ABC up, and then another larger ABC here, which is going to give us a sharp, complex correction. So I see the laws the guideline of alternation satisfied here. Now, I also have this information here about, so wave theory is very much tied to Fibonacci ratios. Moves will retrace to a certain degree, and this is something I find that's very promising. So if I have this labeled wave 2 here, and I draw this up to the top of wave 3, we have retraced pretty much perfectly to the 0.382 Fibonacci, which you can see here. Wave 4 is typically 38.2% of wave 3. So here is our wave 3, and we retrace 38.2% of it. So, I think that's a really great looking chart, something that is sort of guiding my instincts. I certainly want to see some shorter term technicals turn up. One in particular, let's see if I have it on, is the LMACD. I really want to see that turn up on the weekly time frame. As of right now, it's getting darker and darker. We want to see this curl up, and that will tell me, the correction's over and we're probably moving into one more move up. As of right now, we don't have that. So I'm being patient. As I said, I missed buying, or I should say I bought plenty down here, bought again over here. And my strategy really wasn't to keep buying up here. It's more to play with leverage and get a long in over here. Another way I looked at this too was marking this out as A, B, C. Oftentimes you see the C wave in a move retraced to 1.618, and as you can see, it's pretty close if you fiddle around with it. It's not too far off. So that could be satisfied. That could also tell me that we have a little bit more room down to go. We'll see. It's going to be really interesting times in Bitcoin, that's for sure. And then, why do I think that this is, going on to 5? And I'm actually of the mindset we're going to see the worst bear market ever. And I have two sort of charts set up here for you. One is the BTC CME chart. And once again, I have this simple and sideways sharp sort of examples over here. And for the short-term trend, I had us marked with sideways first, then sharp. Obviously this was a lot sharper than this one. But in the longer term trend, in my opinion, this is what I've been looking at for the longest time, was essentially the news cycle began with the low of the BTC CME chart. This is when institutions really started to come into Bitcoin. This is the chart that they look at. So I was always pretty confident in the fact that we would get 1, 2, 3, 4, and 5. Now, to explain this sort of why I think this, and that's going back to the sharp and sideways, we have alternation. This is a clear zigzag type pattern. I believe this to be more complex: ABC, ABC, and then ABC. And then this is a pretty standard, even though it's a lot bigger and longer. It's an ABC of an expanded flat. So you can see 1, 2, 3 wave, 1, 2, 3 wave, and then 5 waves down, 5 waves down. So again, if wave 4 just ended down here at the FTX collapse in November 2022, I'm sorry, what was that? Yeah, 2022. Thus beginning the lower degree wave 5 trend, which again looks like this. We should still have one move up to somewhere in here. I don't think it touches the top trend line again at all. But since we have been, I should back up a little bit. I had been very much thinking that we would have already topped in terms of Bitcoin's latest bull run. And that was based on, we have a sharp, actually I should pick the trend angle here. So you can see based on the trend angle, that's like a 64 degree trend. We had like a 64 degree trend here. I was very much of the mindset that this was going to be like 64 degrees and we probably would have topped, in 2023 even. Didn't quite work out. We still didn't nowhere have we got this sort of same steepness in a trend. Maybe that comes in the final wave up. I don't know. But I still kind of don't think so. I think that there's a possibility based on, all the different wave counts and behaviors and things like that, that this could be the start of actually a new trend. And the way I have this one counted out was, this is the sharp, then this is the sideways correction. This is obviously a lot more complex, which I'll count out now. It would be W, X, Y, and each of these creates an ABC correction further. So I'll count those out next. A, B, C. Lower the degree. Let's put it to that. and then we have an upward A, B, C. Getting messy. And then finally an expanded flat here going all the way to ABC. So basically, this still could have been the beginning of a new trend, end of wave 4, but it would ditch this entire idea over here, which is fine. When you do the math from the length of this correction is about 3 times, this correction is about 3 times as long as this one. So typically in Elliott wave theory, the two types of corrections, wave 2 and wave 4, should match in time. So that's throwing me off a little bit here. However, when they do extend in time, they extend based on the Fibonacci sequence. So it would be a multiplier of 1, 2, 3, 5. And this is exactly 3 times as long as this correction. So that still satisfies some, Elliott wave time rules and guidelines and things like that. So now, if I get rid of all this, though, there is some worry here in terms of, if this is wrong, if we've topped here, if we go back to this chart, this is it, this is the end of the cycle, we could have that still. And what that would have to look like is, after a cycle has ended in Elliott wave theory, you get an A, B, and then it should actually take out this low. I just don't see that. The problem here is if we don't get this final 5th wave up here on the short term, then this is an A, B, C correction. So what would come next then in that case is a 5 wave move down that's extremely sharp and would look, a lot more like this. So this, I'll actually draw this out here. So essentially we had A, B, and then C, and then, the waves here in terms of that. I just don't see this happening, and I'm going to show you why. And, I'm not the biggest believer in things like, back in the day, stock to flow model was like gospel in the crypto industry.
Yep.
I really didn't believe in that. It's now since been like mega debunked. No one really pays much attention to that. But I have noticed the Bitcoin power law from Plan G, Giovanni. I don't really know the rest of the name or anything like that. It is starting to gain a lot of steam. I respect mathematical models. I think it's very sound. It looks good. It seems to fit. But even those I don't necessarily believe in. They're not ironclad. I feel like that model could be broken. But there is the Bitcoin power law corridor, which is a technical indicator made by Capriol Investments, and as you can see, it's really housed all this Bitcoin price action like throughout history. And I truly believe that there is some truth to this. I don't think that this just forms like this. I've seen log channel indicators that have this drawn, and it's like completely broken at this point. That's not what this is. This is a little bit different. So, in my opinion, we really can't get this ABC wave and go back down to even 10K, 12K, 14K, and it would just kind of break Bitcoin's long-term trajectory. Assets grow in like linear format where the chart, S&P 500 looks like this and grows, basically upward, in this trajectory. Meanwhile, Bitcoin grows logarithmically and more grows, along a curved line like this over time. So I just don't see this happening. I feel like, granted, we don't know how Bitcoin would behave in a real recession. Everybody's selling everything. It's still rather illiquid compared to, say, the S&P 500. And because of that, I guess something like that's possible. But, again, I just don't see it. And if we were to take the bottom reading of this, the lowest, in theory, according to this, Bitcoin will go is about 30K. Now, we've talked about the whole sharp and sideways correction before. Truly, Bitcoin can retrace all the way. Let me get arrows. There we go. So Bitcoin can actually retrace all the way down into here and still be a valid 5-wave count. It could be, 1, 2, 3, 4, 5. Now that looks real wonky. Again, I don't see this deep of a correction followed by this large of a 5th wave, but that's still how it works. Wave 4 just can't enter wave 1 territory. I actually neglected to bring that up on this chart. This is why I thought all along that Bitcoin was in, this particular count was due to this. And that's the fact that wave 4 never retraced into wave 1. And it's so tight and so close that it just feels like, the market dynamics that we don't understand, the Fibonacci ratios, the mass crowd psychology, it just seems almost mystical that it happened to stop so close to where it would have invalidated this idea. So I still give some, if anything, this is still probably my favorite count. But I can't ignore what I had drawn out here. This is obviously the worst case scenario. This is what things should look like if we've topped. Because if we have topped this early, it should mark the end of the cycle, and in that case, you have the largest degree correction, so far, because it's actually, and according to Elliot wave theory, after a cycle, the C wave often comes back into the price area of between wave 3 and wave 4. So if this was the top of wave 3 and this is wave 4, or this is wave 4, coming back into this area totally makes sense. Again, I don't think so. I think we're still poised to move up here. And then there's actually one final potential pattern it could be in terms of Elliott wave, and it would be an ABC here, and that would be okay. And if it was an ending diagonal, which is possible because an ending diagonal assumes the end, and it's the end of a move, but it would be it would count out more like this. The rules are a little bit different on such a pattern, where wave 4 actually is supposed to come into the price trajectory of wave 1. So this is a possibility, something like this. And you get ABC corrections all the way up. I can't rule that out. I think that's a totally valid idea as well. But I still lean towards probably this guy and seeing something. And another reason why I lean towards this one is because I just don't see the economy cooperating with us and continuing to look strong or favor investment into risk assets for all that much longer. I mean, granted, I'm from the United States and I'm only in one country and have this one perspective, and we're a global economy and crypto is global. But I see the demise of the United States. I think the presidential race is a circus. I think people losing faith in politics, in the government, and there's an enormous change in the social mood, which is what Elliott wave is truly about. And if that's all true, I definitely see the end in sight sooner than later for Bitcoin, crypto, stocks, really kind of everything.
Yep.
Which I guess I'll end on the total 3 charts. So now this is a little bit different of a take. And again, according to Elliott wave theory, we should see one more move up. This could be something else. This actually almost looks more corrective, and we do get that sort of lower low. But what I wanted to point out was this anatomy of a bubble using the Kindleberger-Minsky model, and it's essentially the same sort of thing happens. You get revulsion, which I'll get back to in a moment. Displacement just means something happened that shook up the economy and is going to cause new growth. It could have been AI recently, A lot of times you know, quantitative easing was really displacement after the great financial crisis, which then causes a huge boom and then reaches euphoria, and then it's so overblown you get the crisis, and then after the crisis you get to revulsion. Now, um, based on my studies, revulsion is actually more painful than capitulation. Revulsion is a strong pulling away or drawing away, a sudden or strong reaction or change, a sense of utter distaste or repugnance. And essentially, we're at the point to me of revulsion in altcoins. Down here, for whatever reason, people were still enthusiastic about alts. They were buying them. And now at this point, people are like, what the hell did I buy? I hate this stuff. It's the stupidest thing I ever got into. I see long term holders of something like XRP, people who have been in this thing for like 6, 7 years. They're like, oh, it's never going up. Uh, that could be the most, it could be terrible. It could, be right, the last sort of point before everything collapses. But it also could be the most bullish thing about the market right now is the fact that everybody is really kind of like, what was the point of altcoins? What does this thing even do? Is there any real value in it? When you start to question everything and sort of have a distaste for what you've invested in, that's revulsion. That's what the revulsion stage is of any cycle. And it really feels like that's where we are with altcoins. And if that's where we are with altcoins, it should, in theory, take off into a boom, displacement, and boom next. At the moment, I don't really see the same sort of setup for displacement. Now, to me, right out, this was the revulsion phase of the last cycle, and then right in here was when like DeFi started to really gain some steam, and you started to see the TVLs start to skyrocket. NFTs started to come out around here. There was a lot of displacement. There's a lot of things and new technologies that came out that started to tell us a boom is coming, and it came. I don't necessarily see that here in terms of like a new technology or any sort of newness in cryptocurrency that people are going to actually use. The big thing about this particular cycle in DeFi and NFTs was it was actually causing Ethereum and other layered cryptocurrencies to be used, and then the gas fees rise. People have to buy to pay the gas fees. People are making money. They start to roll money into their capital into other things. That sort of like domino effect isn't really here right now, and I don't know what's going to cause it. A lot of people think like meme coins, but I just don't see that. I think that's gambling and whales having fun with low liquidity situations. But I don't know, something, we could see a resurgence of DeFi, and all of a sudden people care about that again, and people are staking their coins and farming and doing all the other things that they did back here, and we get a boom. Maybe it takes longer. I don't know, but I think that it's really important to consider this revulsion part of the Kindleberger Minsky model, and look towards something that is going to cause this displacement. If there's anything out there, that's really where you want your capital to be in terms of altcoins, and then we'll get that boom. If we don't get that boom, then I hate to say it, we're probably looking at something more like this then, where we are done. And this is A, B, C up, and we just started A here, and maybe we get a bounce and then into C, and it would take us back into the 100 billions in terms of the market cap, which much like the Bitcoin power law that I used earlier to kind of justify why I don't think that'll happen. It seems pretty insane to me that all of crypto. First of all, I think it's insane to me that all of crypto is worth only 500 billion right now. When, I mean, what's the market cap of Nvidia at this point? 3 trillion, or I mean, I think it's under 3 trillion now. But like, you know what I mean? Like, how is an entire asset class not valued more than one company in the world? And I do understand Nvidia is producing real value. They have revenue coming in. They have the earnings reports, things that people can actually pay attention to. There's a CEO, there's a real team, there's all this and that, and there's not all that in crypto. But I still think from a speculative stance, crypto seems undervalued to me. And even though I'm almost more of the mindset of like, back what I was saying, like, what does it even do? In this latest crash, I took a good look at my portfolio and I reduced some things, and it was because, like, I looked at it and it's like, well, what does this thing do? Does it generate any revenue? Does it, does it have this potential, that potential? And I really kind of didn't like what I saw in my portfolio. And there's not a lot out there that I think has a lot of true value. I apologize to any altcoin holders that take offense to that. I think maybe you could use some reality check depending on what it is you're holding. You want to only hold things that are going to produce capital for you, produce returns. So if that isn't happening, at some point you may want to get rid of it. You may want to use this time to reallocate your capital, do some portfolio shuffling, and then never go all in on one coin. I think that's an absolute huge mistake that a lot of people do. First of all, if that particular coin has fails or has a huge crash, all your money is gone. Whereas if it's spread across a few things, there's less likelihood of that happening. But also, if you're completely invested in one thing, you're going to be so biased, and you're going to make poor decisions because of that bias. So, again, really not getting tied to any particular coin, not being overexposed, maybe having some money in stable coins or something like that, or cash is a smart decision. That cash is always there waiting for you. You could, a lot of people have been buying all the way up. They could have bought a dip. So just, where we're at this sort of area of caution, my advice to everybody right now is to just look over your portfolio again and make sure you really understand what you're invested in. This stuff is at a sort of dangerous point where I'm saying, yeah, it's now or never. We're either going to get a huge bounce this month and things are going to start looking better in crypto and Bitcoin. But, with the whole social mood out there, with the actual value that a lot of these coins offer, I don't know. It's not looking as positive as of an outlook as it was even 6 months ago, a year ago. And certainly not back down here at these lows where I'm sure, a lot of people bought their bags. So, wish you all luck. Hopefully, things work out, but, you don't make money off hope. So make sure your risk management's there. You set your stop losses. You know what you're getting into.
Tony, thank you very much for that. I really appreciate your time. I've got to ask you a couple of questions. Number one, I've been long expecting for this cycle that what we would see is, rather than have a broad-based alt season, that perhaps a handful do exceedingly well, and most of them are relatively lackluster. Is that a scenario you could foresee playing out?
I definitely do. Solana is one of the coins I follow, and to me, it has a really good looking chart. I think there's a huge possibility that, just like we saw in the stock market where, Nvidia and other tech stocks really overperformed everything else, and small caps were left behind. We could see something like that in crypto, where the last leg up really sucks in all the capital, and it's relegated to just maybe a handful or two of coins, and the rest of it kind of just falls and doesn't ever do anything again. One thing I did want to sort of comment on was the fact that, I'm actually pretty negative on altcoins, and the most negative I've been in a couple of years, which kind of made me feel like this revulsion thing had some real weight to it. I want to point out that the last time I felt this negative about altcoins was probably right over here, say August, September in 2020. I remember saying to myself, what do these coins I hold even do? I remember at that point I sold some Ether into Bitcoin because I was like, Ethereum doesn't even do anything anymore. Like this, there's no more ICOs. Like, who cares about Ethereum? and then all of a sudden DeFi and NFTs and everything blew up, and out of nowhere, Ethereum outperformed Bitcoin by miles, and it was like, wow, why did I do that? Things you learn over time with experience. I wasn't into TA as much then. So yeah, I pay attention to my own sentiment and my own emotions and how I felt about things in the past and compare that to now. So, there is always that chance that although I'm feeling extremely negative about altcoins, that could be again the revulsion period, and something is coming right here that just sends us all the way to the stratosphere. So, I can't rule it out. I think the most, I'm a trader. So as a trader, I try to be flexible. Although I'm more on the bullish side with like Bitcoin, I've still sold, some coins around 70K. I closed out a leverage long that I had at like 63 before we started like really falling. And the goal there was not because I was done with the cycle. I'm still holding plenty of Bitcoin, but it was more like, I want to reload and recapitalize and make sure I secure this capital and gains right now so that I can redeploy that again later. And so far, that strategy's actually worked out really well for me in terms of Bitcoin. Altcoins not as much. I did pretty well with Fetch. Happened to catch that at like 9 cents, went all the way up to like $2 and change. Sold that around there, and then but even that's back to like it went under 90 cents, and a lot of people I know bought in then. So you can, if you're not smart and cash out if you got gains. Every once in a while, don't cash it all out. Cash out 50%, cash out 33%. Just have some type of plan if your alts do end up doing well. Again, I'm almost more on the bearish side with altcoins. So, but yeah, just definitely worth me mentioning that even someone who's been in this for 7 years, who's been through extreme crashes, extreme rallies, incredible euphoria, incredible fear, I definitely felt similarly now back in August and September 2020. So who knows? Maybe my mind's playing tricks on me once again, and alts are gonna run. But again, I'm losing faith in that every single day.
Yeah, you make some excellent points about protecting the capital, though. Once you've got a good gain, absolutely no problem with taking some of that off. I don't know if you know, I actually went flat a little while ago. I've got no trading positions. I've still got core allocations from the 4-year cycle lows for Bitcoin and longer term accounts or whatever. But yeah, I mean, as you said, it's now or never. There's a lot of uncertainty. These charts could really go either way, and there's nothing wrong with protecting the capital, right? If you don't sell, then it's never even real in the first place. So yeah, absolutely right. Do you want to plug anything? I'll obviously link all of your stuff in the description to this video, and I'll pin it in the comment as well. But if you want to give anyone a shout out or any of your companies a shout out, please feel free to do so.
Yeah, thank you so much. So my biggest project right now is my CoinCharters VIP newsletter. It's a weekly Substack. I do a special issue every now and again, but I give a bunch of free charts right at the beginning. There's themed sections: Wave Watch, which focuses on Elliot Wave. I have Bitcoin Bulletin, which is just a Bitcoin section. Altcoin Alert, which is going to give you calls for altcoins that are doing well. It looks at Bitcoin dominance. The Macro Monitor, that is going to look at stocks, gold, oil, VIX, and then include a lot of interesting, macro data and things like that. I also do an occasional chart class where I teach things in there, like teach you how to set a certain stop loss with, like the parabolic SAR, or, teach how the LMACD works and why you want to maybe buy crossovers, or, go over data related to death crosses and golden crosses in Bitcoin and Ethereum and things like that. So, yeah, please give it a follow. You can subscribe. Premium members get access to my technical indicators, the Raging Bull, the Trend Wrangler, Bitcoin Bullseye. Bitcoin Bullseye is designed to call out tops and bottoms. Let's see. I'll show that guy off. And yeah, you get these with a premium subscription. So this is a pretty good thing for me, where it's currently not telling us that there's any sort of top over here. so hopefully, as I keep saying, we still have a lot more to go. But yeah, thanks for that. I certainly would love everybody to kind of give my newsletter a look. There's a free 7-day trial or something like that, and you can always, if you follow me on Twitter, hit me up, DM me. I give out coupons every once in a while. Giveaways for X amount off the subscription and things like that. But yeah, thanks for having me on the show. It was a blast, and I hope your audience was able to get something from my analysis.
Oh, I know they're going to love it, Tony. So thank you once more, and I appreciate your time, and I'm sure I'll speak again in the not too distant future.